trade data. We're joined by Stan Shamu from IG in Melbourne now. Stan, yeah, the Aussie's certainly getting off to a good start. Was it mainly due to the China trade data, would you say?
Yeah, I think the momentum had really picked up from Friday, where, of course, that better than expected non-farm payrolls data didn't quite derail the risk rally. Of course, normally we do expect the US dollar to gain on the back of some better than expected US data, and ultimately this weighs on risk. But it was actually a situation where we saw a sharp reversal from the lows for a lot of the risk currencies, particularly the Aussie, which tested the 90 region and back into that sort of 91 region. And I think we're just in a situation where a lot of investors are now feeling that perhaps the tapering talk is overdone. Of course, we do now firmly expect that to happen at some stage, but the Fed has firmly said that this doesn't really imply it's a tightening of the balance sheet. And of course, with the Fed funds rate actually likely to stay on hold for much longer, then of course there's nothing much to be concerned about. And as well, if data is coming in this much stronger, it just means the pace of the recovery is really accelerating. And of course, this will start to feed through to companies, and of course will show up when we come around to earnings season, when companies start to, of course, report and show that the recovery is indeed helping businesses across the US. So I think overall the risk mode is definitely buoyant at the moment. I think we'll probably continue to see this Aussie do well in today's session. It's already gapped higher from Saturday's close, which was around 91. Up to about 91.3. So with a couple of prints today, particularly the ANZ job ads at 11:30, and of course CPI data out of China at 12:30, there's still room for a bit more volatility for the Aussie. Of course, that wider than expected a trade surplus from China certainly sets the tone very well to start off trading in Asia today. And with that figure coming in at more than a 4-year high, and of course with exports really showing that they're picking up, particularly to the US, Europe and South Korea, then this really does reinstill confidence for the risk space. Unfortunately, with the CPI, it's going to be a tricky one. We are expecting CPI to show 3% growth. But of course, this recent acceleration in the CPI reading certainly removes that inflation risk, but also puts a bit more pressure on Chinese officials to feel that perhaps a more accommodative stance is not warranted given the sharp rise in CPI or prices. So at the end of the day, it's all about whether or not this CPI comes in much better than expected, and this has the potential to sort of hamper the recovery that we're seeing today so far.
So Stan, what's your opening call for the ASX 200 then?
Well, as it stands just from Saturday's close, we're calling it up 0.5% to about 5,210. So it's a nice little gain to start off the week. Of course, the cyclical names are likely to lead the recovery, particularly in the resource space, where BHP's ADR is pointing up about 0.7%. So this is despite a slight pullback in iron ore prices as well. So there's definitely a bit of a better sort of trading risk mode for a lot of these assets, and we should see some of these risk stocks lead the way today. But of course, there will be a few concerns, particularly QBE, which has obviously announced that trading that loss of 250 million on some write-downs to the North American business and provisions as well. So ultimately, it's all about exactly how this will impact their stock price. But of course, with these trading updates after a few days of trading holds, there's always a little bit of panic in investors' minds. So the initial reaction will be just selling off and waiting to see how the rest of the market responds to the results before starting to look at a new position on QBE. Hopefully it doesn't really have too much of an impact on the rest of the insurers locally, but of course it might see a little bit of cautious trading in that sector. Apart from that, there's not too much going on. I think we've got an investor presentation, an investor update for Brambles, and apart from that, I think it's going to be a fairly quiet session on the company-specific news front, and it'll be a more risk-on or risk-off themes dominating markets, particularly with China data due out.
All right, Stan, thanks so much for that.
Cheers, Bronnie.
Stan Shamu there.